Hi everyone, this is Steve Miley, the market chartist on behalf of forexfraud.com, and we're taking a look here at both the Antipodean currencies, the risk currencies, Australian dollar, Kiwi dollar, both against the US currency in here, both on an intermediate term basis, showing and exhibiting a more bullish tone in here through January and certainly going into mid-January. We had the flash crash that kicked off the year in here, but the market rebounding almost instantly from that, and then putting in a really strong rebound in early January, and then more of a grind higher in here up into mid-January, but importantly taking out resistances here at 70.77 and critical for us here at 71.49, 72.04, enough to shift the intermediate term outlook to more negative, to more bullish, also reversed up through this trend line in here after the flash crash. So all of that setting up a more bullish intermediate term outlook. So maybe for a 1 to 2 week outlook, we're still looking for higher price action in here, maybe up towards these higher targets, towards 73, 74 big figure. However, in the very short term, the market's kind of stalled and gone sideways, and this is even with a risk on scenario across global asset markets. Remember, equity markets still pushing higher in here, so a little bit of a disappointment with the market very sideways. So I think there's a very short term risk for the market to push back lower, going into the second half of January, into this week, but then ultimately looking for, whilst above this 70.24 level, looking for upside pressures to resume on the intermediate term into the second half of January. Similar technical story in here for the New Zealand dollar, a strong recovery. There's the flash crash, not as aggressive for the New Zealand dollar, but then the strong rebound after that up through 67.90 was enough for us to shift that intermediate term outlook to more bullish again, and we do see bigger picture upside risk. However, a more significant setback in here for the New Zealand dollar compared to the Australian dollar does put negative pressures, so we do see risk maybe lower in the short term going into, again, the beginning of this week, but whilst holding this 66, 26, 12 area, we're looking for the market to be in corrective mode, and then looking for eventually more positive pressures to come back into the second half of January for targets up here towards 69, maybe 68, 69, maybe even as high as 70 into the second part of this month. This has been Steve Miley, market chartist for forexfraud.com, and I wish you a great trading week.